Hey guys, welcome back to the channel, best place for long-term stock investors. What we're going to talk about today? Well, we're not actually going to talk too much. We're actually going to show you how we're going to do some research, some totally fresh research into Dagang Exchange Berhad or D-Nex. Right? We're going to pretend that we don't know nothing about the company. We're just going to look at the financials and we're going to see what we can understand about the company and whether or not it's an interesting investment to make. Now, before we begin, as always, none of what we say should be taken as financial advice. Please speak to a pro if you want that sort of advice. And we do not own any shares in D-Nex. Okay, let's look at D-Nex. D-Nex is quite a popularly traded stock, right? It's always in the top 10 every time I see. Yeah. At least even maybe in the past year, right? So speaking of the year-to-date, past year rather, returns, actually it's up 8%, not too much, but at the peak it's up probably, let's see, 70%, nearly 75%. Year-to-date it's actually down 2.75%, so not doing too shabby, or rather, considering the market is actually quite down.
Yeah.
It is not
actually,
bad.
I'm quite curious, what's the max if you drag it on?
So it's actually down 5% since I wouldn't want to call it IPO, but certainly it's not been doing too well lah.
Yeah, trading at a 2.51 billion market cap.
Look at that, the P ratio is 3A. Just kidding. Okay, so what do they do? We always like to go to our trusty website Ticker. If you want the link to sign up, right, go use our special code in the comment section and description. So basically, here in the overview, I won't read everything, but basically D-Nex is an investment holding company that engages in IT and e-services and energy business in Malaysia. It is involved in the development and provision of business, government, B2G, e-commerce and computerized transaction in trade facilitation services, research and development. Okay, I'm not going to read all, you guys can read, but basically they're heavily linked with the government in terms of all these of their offerings. They are also, I believe, in energy, right? And one more thing is silterra, which is semiconductor, which I'm not sure if it's actually mentioned.
No, it's not mentioned here yet.
It's not mentioned here. So you can also see in the segments, this is roughly the breakdown of their
I'm curious
offerings.
though. You want to so one great thing about Ticker is that you can actually plot out your graph based on how much revenue they're actually earning if you want a more HD kind of view.
Yep.
So actually, let's cancel off this first, and then let's go. Let's click everything lah. IT, corporate. Oh, I like IT. Then scroll down. Corporate. Yeah, let's click everything.
Others too small.
Then energy.
Yeah.
Okay. So maybe you want to show labels. So from first glance, we know that there are this business segment called the IT revenue is actually contributing the most to their business. And another thing that you want to take note is the energy revenue, which is their oil and gas segment, actually contributed the second largest revenue in their company. But specifically, what type of business segment, we don't really know. I think if you don't know what they are doing, I think another way to find out what is their business is go to their website. Yep. So this is their website.
You can see on top here.
Yeah, I think they already categorize it based on their business segment. So that's the IT. Let's have a look at their IT. So
there's this thing called National Single Window. Okay, so there's a lot of back-end e-services for trade facilitation. Right. So now, of course, we won't have the time here, but again, this is probably something that you will want to Google and find out what in the world is Malaysia's National Single Window and why that's important. So you can see here what they facilitate, right? It's electronic customs related transactions, so trade customs and duty payments and electronic document transfer between member, always trading community. So they have 100 million electronic transfers and approximately 8 billion worth of custom duty payments are transacted annually through their proven infrastructure. So you want to Google. Another thing is how much custom duty transaction payments are there globally, nationwide, right? Does D-Nex dominate everything or they don't dominate everything? This is right now the most important segment, obviously, as exemplified here.
to be honest, right, when they describe all of this, I have not a single clue. I don't even know what they're actually doing.
Yeah.
Yeah, that's how like technical their business is.
Yes.
Is it, I mean, if I were to like imagine, right, is it something like your can I say it's something like an EDC terminal kind of thing?
Somewhat like, close, but like maybe for customs and trades. But anyway, without embarrassing ourselves any further, here's what I can tell you, right? One, they obviously work with the government, so relationship with government is very important. So it's a very, I wouldn't say exactly, but it's a very MyEG like company. The bad part obviously is that if let's say there's a change of government, then they may lose their contract. The good part is, and this is actually a personal mistake of mine with MyEG, is that some of these things are so, how do I put it, right? It's part of the plumbing of the government system.
Yes.
And so even when there's a change of government and all that, it's actually very sticky to the government. So like MyEG, for example, many people said that Mr. T.S. Wong, right, the owner, was close to the Najib family. And so when Najib got kicked out in 2018, he would lose his contract. But what people failed to realize is, including myself, was that the services were so sticky that the Pakatan Harapan either had no time to go and care about all of this, or it'd be too difficult, because then if they get rid of MyEG, then they have to retender and they have to find all that.
I mean, if you just think about their business segment, I mean, MyEG is like they're renewing your road tax, the label license, and all those necessary documents that you need to like renew. So that itself already can kind of know that the stickiness of the business.
And in this case, D-Nex is involved in trade facilitation, right? So this is also another one of those like the plumbings of the society, or plumbings of the country. So that's one aspect to look at it. I'm not saying that this means that D-Nex equals MyEG, but I'm just highlighting the potential similarities of this, right? So anyway, moving on to energy. So you can see here, they have drilling.
Okay.
Right, drilling technology.
Drilling services.
Then they also supplies oil and gas equipment. And over the coming years, so they are also doing some upstream stuff lah. So now, this will be my first query. I would say a question. Why is it that the company that is doing IT suddenly in energy, right? These are, at least to my mind, I could be wrong, but these are different skill sets, different set of people. This is the second largest.
Let's have a look at their segment. Okay, so they started their business at 2015.
Yes.
Oh, okay. So they have been doing IT for the longest, and they are diversifying into oil and gas.
There you go. So that is something that to take note of. That's energy. So it's not exactly an unknown industry, right? It's something we already understand, so not much needs to be said. And then last bit is, of course, the acquisition of silterra, right, which was completed in 2021. They're attempting to be a, here as they can see, a global foundry player. So this is similar to something like a TSMC, something like that. Again, we're not going to spend the time to discuss the challenges and opportunities that silterra or D-Nex will face, but certainly they are also going into this. Now, in theory, I would say that these three things, again, right, just based off the information that I've read, these three things working together, right, already poses some questions that I have. However, on the flip side, if they do succeed, especially with oil price going up, if they continue their trade facilitation business, and this D-Nex, this silterra project actually kicks off well, you could see a national gem in the form of Dagang Exchange, right? I'm not an expert on the stock, but that's what I would definitely be talking about.
Well, to me, it's the first few sentences when I read from their website, I'm really like having a lot of questions also.
Yes.
Actually, this is actually part of my checklist. If let's say their business segment is too difficult to understand, like even a few sentences, right, I will actually normally just skip it. That's just me. But that's just me.
Sure. Sure. Yeah. So, let's look at the income statement and look at all the everything here.
Let's have a look at their revenue.
So we look at their sales and let's look at maybe all their different profits.
Look at their operating profit.
And here.
And net income.
Here.
Yes.
Okay.
So specifically, let's have a look at revenue. So revenue, they have been they have actually made more than 4, I'll say 3x, 3 to 4x.
Right.
Over the past like few, how many years? Like 10 years or yeah.
So now here's what's interesting. Even though revenue has been increasing, gross profit, which is after clearing off all your raw materials and things like that, have actually reduced. So that is a sign that that they are entering businesses that are, I don't want to get too technical, but TLDR is that they are less profitable, less efficient use of revenue lah, in that sense. So less profitable business. But we'll see, silterra, right? Will that be different? So that's, again, one thing you want to take note of. And then operating income is also declining as well, which means that it could be, I could be wrong, but it could be that every business they go in, not only more capital is required, more personnel is required as well.
Yes.
Right, so we're going to upstream oil and gas.
Yeah, I think you guys did a calculation on how much capex that potentially silterra need to spend, right? In one of your videos. Yes,
you all can watch the video. Maybe we'll put it here somewhere.
Yeah.
Right, and of course net income. So net income, I suspect there's some one-off items here. That's why you can see like in 2016 and 2021, like the net income is more than the gross profit, and or at least equal to the gross profit and more than the operating income.
Yeah.
So see, these are some of the things you want to look at, and you can see it's quite a lumpy business. But even though the revenues has actually been steadily increasing since, let's call it 2015, right? 2015 is 990 million to about 330 million. So that's roughly about 3.5x.
Yep.
Yet the stock price, it has grown a little bit, right? So the revenue only grew by so much, grew a lot, but yet the stock price has only grown by.
But actually, personally, I think that the stock price wouldn't move if they didn't manage to get the silterra contract.
Yeah, that's true. Yeah, so you can see, right, in the oil and gas era, which is 2015 to, let's say, 2021 lah, or 2020 lah. So you can see, you're right, so it's flat.
Yeah.
Right. So why is this the case? Again, this is the market informing us that, rightly so, that they are entering in a business that even though the revenue increase is less profitable, so therefore it makes less sense in terms of capital allocation.
Yes.
So that is one other insight. Let's look at the balance sheet. Well, guys, if you're enjoying the video, remember like, comment, subscribe, click on the notification bell so that whenever new videos pop, you know it fresh. Let's continue.
Okay, so before I even start the top line, I usually scroll down to the bottom. So, and then I'll just straight away look at their net debt first. Net debt.
Let's go.
Okay.
Ooh. Okay.
Oh, okay. Surprisingly, a net cash company.
No, it's
it's a net cash. If it's a
debt.
Positive, it is a
debt. Yes, correct. Okay, that's good.
So, yeah.
But why is it net cash? Is it because they're generating more cash or not?
I think another, maybe just a tip, you can actually go to the common stock. Let's have a look at whether did they even raise money.
There you go.
Okay.
So there's a lot of probably some rights issue here, I want to say, potentially.
PP rights.
So they are diluting shareholders, right?
Yep.
So again, something to take note of. Now, the next thing to look at would be the cash flow statement, right?
Yeah.
And you can actually see it here. Let's go and verify.
Okay.
So you can see
operating cash flow.
No.
Oh, you want to go?
Yeah, there you go. Issuance of common stock. So they raised.
Let's click it. Let's plot it in the graph.
There you go.
Okay.
So they raised 125 plus 280. Give or take is 450 million. 420 million.
All of these like small little detail actually tells you like, because sometimes when you first look at the first glance, right, when you see that, it's a net cash company, but is it really coming from the business or is it coming from the shareholders? Did they even raise money, or is it because they get more, I don't know, some debt they actually classify as cash?
Yeah.
I don't know. I don't know why. Maybe some accountants, maybe you guys can educate us.
You need to look at this, right? So here's the key. So when you invest and when you issue common stock, like when they issued in 2016, what was the results of the cash flow from operations? You can see not looking too good. And so now suddenly in 2021, they doubled, right, the amount of
doubled, but they are making less.
Well, to be fair, it takes time to be a foundry. It takes time, maybe 2 to 3 years.
Yep.
But that's where we're at. We are at a 2 to 3 year wait period. Could it look like 2016 again? You never know.
Yep.
Of course, for the company's sake, we hope not. But certainly as an investor, there's a possibility that this will happen. And so that's when you want to be trusting or figuring out whether you can trust the management. So maybe let's look at the ownership, right? Okay. So you can see these are the guys: Arcadia, Acres, Foxconn.
Foxconn.
Who are these people? Who is the management? You know, things like that. You can see insider, anything happening for insider transactions.
Oh, nothing. Only one?
Yep, only one. Yep, very little.
But I don't think he's a purchase or whatsoever.
So you guys want to, you know, for those who are listening, look for especially this, maybe let's call it these top 5 people here. Who they are, what is their interest, things like that.
Actually, I'm quite curious on their return on capital.
Yes, that's another one. Apologies.
So let's go to financials, ratios. So scroll down.
Yep. Wait, let me cancel first.
Ratios and
so you can see IT businesses, they're generally quite good, but you know, it declined. Now what is interesting, even though at the peak, right, of their returns on capital, they didn't do too well stock price wise, right? So 2012 to 2015. 2012 to 2015.
I think it did a little bit to 2015.
40%. Yeah, okay.
I think it's fine.
But there's a limitation to what they do.
But right now, what the market is actually suggesting, right, with the spike in share price, they are actually putting a lot of high hopes in their silterra business.
Exactly.
Yeah, and if let's say they didn't even manage to deliver, I think
that would be quite painful for shareholders.
Yes, definitely.
So maybe a final verdict. If anything more
first thing is this business, do you even understand what is this business, what they're actually doing? Personally, I don't even know what they're doing. So for me, this is just a pass already. Looking at their financials also, it's a lot of questionable stuff. I mean, although they are spending...
And to be clear, so by questionable, I don't think we mean that they are lying about their numbers. But what we mean is, like...
Can they deliver?
Can they deliver... You know, they will have concerns business-wise. Yeah.
So, I mean, it's going to take time. The silterra business, you don't know whether it's going to perform well. If it did, then congratulations. I mean, your bet is right. But if it didn't, you need to expect the pain,
potential pain. Yeah. I'll just end off by saying that, you know, don't necessarily look at a stock because it is hot in the market, right? Now, a stock is not bad because it's hot in the market, but you shouldn't think it's good or worth looking at simply because it's hot, right? And DNEX is one of those stocks. Again, go back to the basics, right? Which, you know, if you really want to get a full-on systematic understanding of how to analyze stocks carefully, you know, check out our SIB program. But, you know, that aside, you know, you want to go back to the basics, right? Is this company run efficiently by the management? Does this business have a good focus in terms of their segments? Have they have a history of execution? How does their balance sheet look like? What are the industry dynamics, right, of the businesses that they are in? And of course, as an investor, you want to know whether the valuations are acceptable to you. And so with that, hope you enjoyed the video. If you like this sort of video, remember to, of course, share it with your friends. Follow us on Telegram, Facebook, things like that. Instagram as well. And signing off, we'll see you in the next video.